BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's have a look at this banging chart. Pumping straight out of this consolidation. This is your weekly chart, looking very sweet, very tasty. About to make a cross, so it would appear, on the weekly MACD, just giving it that extra power for a reasonably longer term continuation. Obviously, we've got a Bollinger Band below us, so this is a candle that's been born outside of the band today. Yeah, we are bullish, obviously. We're definitely bullish. Not got a pump signal on this on the daily yet. The 4-hourly pump signal that we saw, well, a few days ago before the pump clearly played, so the pump signal kicked in around 26,500. Here we are sitting around 30. So lovely stuff, really, lovely stuff. It was always going to happen. We always knew it was going to happen. These falling channels almost always break to the up. Would have loved to have got that retest down here, but never mind. So we can still wake up richer than we were yesterday, which is tasty and very nice, very nice. It's good to wake up like this in the mornings. So, what's going to happen from here? So, what I want to see, whether we pull back first or not, is I want to see a pump signal generated on this daily. That pump signal is likely to carry this up and beyond its previous local high around 31,200 and above 32 and beyond. So on the Patreon live stream, I was talking about how this is not too dissimilar to our previous market cycle, humble beginnings of 2019, right? So we go up, we consolidate basically, and if it wasn't for the Black Swan event, we probably would have trickled our way up steadily rather than have more sideways. But basically, we're in a range of around about 100% range. Give or take 6,000 to about 12,000. So I'm looking for the same sort of thing roughly to happen, over a longer period of time on this market cycle. So accumulation between 20 and 40, roughly, within wicks, because obviously we saw lower than that in the cycle and higher than that in the cycle, but generally that was where we saw the majority of price action for about 2 years, and that's with a Black Swan involved as well. So look, it's definitely constructive. The breakout's taking place as we expected, and the correlation between gold has not even kicked in yet. So we've not even had that rotation from stocks. So for those of you who don't really know my theory on this, is that it's not even a theory. I mean, basically this happens all the time in stocks and commodities, whatever. Back in the olden days, as in like last year, basically, because that's how it feels when you trade in markets. Back in the olden days, there was a bear market in 2022. And throughout that bear market, there was periods of big major swings on stocks, as well as big major swings in commodities and currencies. It was a volatile year across the board for everything, and there was definitely some decent gains being made. I called it the Everything Bounce, Part 1 and Part 2. So the Everything Bounce Part 1 was a commodities into stocks. That's what it was. Commodities were running extremely high, rallying super hard, and here's our stocks just consistently going down and down and down. And then we had that rotation. We got a big bear market rally, a decent one. So now I believe that we're looking at the inverse of that. And again, currencies play a big role. So obviously we can have a look at the Dixie for what it's worth. Again, breaking down from a rising channel, just the opposite of Bitcoin. So not in any way different on a formation basis, apart from it being the opposite setup. So I'll be looking for the Dixie to continue down. And actually, as much as stocks are pulling back at the moment, I think they are looking for another bounce. I don't see any reason for stocks to fall down at this point now. So the rotation from stocks into commodities hasn't even begun. And when it does begin, if it does begin, then we're going to see continuation for Bitcoin because it's trended for the most part in comparison to all other charts. In the traditional financial world, very much like a gold chart. So it's awesome to see it break out early, because if this rotation takes place, which I think it will, because we're looking at a significant peak generated soon on stocks, and the Dixie is likely to find a bounce which will help that the stocks pull back and start to consolidate. But in the grand scheme of things, this Dixie is not a happy looking chart, to be fair. And we're going to get that rotation into gold. Gold probably, from what we see currently, based on its chart, likely to come down further towards breaking 19, and at best maybe 1850. That's kind of where it would appear. 200 exponential and simple moving average. That is where we'll be looking to see this this bounce begin, and possibly the rotation. So just to put it into context, right? Rotations don't take place on a 5-minute chart. Rotations on this scale, when we're talking about multi-trillion dollars of rotation, it's a huge thing to take place. We'll be looking for it to take a little bit of time, because there's a pit stop first into cash. So we'll be looking for this to come down, hit any one of these moving averages and bounce on its own merit. We're also looking for this to come down and bounce on its own merit, and it's only when we find a bounce and then another rejection, I think the rotation is likely to take place. Think about it this way, right? If you're clever, you want to make decent money, you start to take profits on stocks, incrementally around now. I took profit on a lot of mine. The biggest amount I took was on this bad boy over here, the C3 AI. And that's not to say that it can't bounce further, but it was, you want to take profit, especially if you're up, several 100%, which is the right thing to do. And if you expect to bounce on the dollar soon, then you'd also be looking for further downside on stocks. Again, I'm not particularly bearish on stocks in this immediate term time frame. We're looking for symmetry in all markets. We're looking for the Dixie to bounce. We're looking for rejection on the S&P, and it's only when all of that is finished then we get a rotation into gold. And remember, gold and Bitcoin have a very similar chart. Big move up, back down, golden cross retest, big up, big massive high, consolidation, still consolidating. And if we go back to our mate Bitcoin, what we see is big move up, big nice high, consolidation. Obviously, first of all, we've got a golden cross retest, big move back up, just the same as gold, and pulled back into its consolidation, and a breakout early. The two aren't exactly the same. I saw this really massive comment on yesterday's video going, how's the correlation going? Huh? It was more eloquently put than that, but basically it said, well, look, things aren't that simple in markets. Otherwise, everyone would just press the buy button, wouldn't they? And it's not like that. Obviously, crypto and gold are very different, but their charts are very similar. And there's a lot of people in the commodity camp, the class Bitcoin as a commodity, store of value or whatever, and then they have traded very similar in the way that they bounced on their 200s and had their golden cross retests onto new highs, then consolidate. But Bitcoin has also got the added problem of being a cryptocurrency, which is not a popular thing at the moment. So bit volatile moves down and up, and also you can take it on face value. We broke out of this as we expected to, so it's all looking good, definitely looking good. Now what we'll do is we'll just finish off by looking at the Bitcoin dominance chart, because we do want altcoins to do something, don't we? There's got to be some kind of season, if you want to call it that, for altcoins. This is a bullish chart on the weekly. We should only really expect bullish things from it, but roughly around this area, if it's going to happen at all, between the 200 simple and exponential, is where I expect to see a rejection. We've seen it in the past to quite a significant extent, poked our way above and consolidated down again, another retest here and another retest here, and then this is your anomaly. This is where Bitcoin rallied 300% in a within a 2-month period, which is kind of how I'm feeling the chart at the moment. The chart kind of feels a lot like this portion. It's also, altcoins feel like this portion of the market. If anyone was around back in the end of 2020, that's kind of what altcoins were like. They were basically unpopular. Nobody wanted them. People were calling for Bitcoin dominance to stay up and remain above 80% dominance, because living in a goldfish bowl is very easy. But once you're outside of that and you get a bit of perspective, you kind of recognize that actually normally there's a bigger world outside the goldfish bowl, and there's a lot of things to do out there. That's not the greatest analogy, but hopefully you understand what I'm talking about. Don't follow the sheep. Think about the bigger picture, which is why I've been talking about bot trades as well, as a potential like good strategy to accumulate altcoins while they basically have their own things going on down at these lower levels. Either way, we'll be looking for some form of rejection in the form of a bullish chart as well. We don't have any bearish divergence on this weekly. We've only got strength and pump signals. And obviously with the SEC and the FUD surrounding altcoins and exchanges, altcoins probably are not for the faint-hearted. I've not got a faint heart, which is why I was happy to scoop up some of them over the last week. And I mean some of the lowest cap rubbish ones, you know, and not an enormous extent of my cash went into those. I think maybe only about 2% of my fiat and tether went into that. So it's a modest amount of money, but you know, in comparison to my overall portfolio, it's not a great deal. Either way, it's all looking okay for now. So the dominance chart, even on the daily, no bearish divergence, no nothing like that, just a consistent, continuous upside. But we do have a significant read on the money flow index for what it's worth, so quite overbought up at these higher levels. So if we are going to start to see some downside, we could start to see it take place now, only on the shorter term timeframes, with a max pullback to this major area of support, which is around 48%, 48.5% dominance. Either way, it's nice to wake up richer than it was yesterday and the day before. It's nice to finally see crypto digging itself out of its hole. Even if it is mostly a Bitcoin driven market, it's still good. And we're just going to leave it there because there's really not much more to say about it, I suppose. On the shorter term time frames, I would expect some form of pullback, whether we hit the 31,000 to 32,000 first and then pull back from there. It's all pretty sweet. Pullbacks can be, I suppose, quite significant, maybe even down towards the lower 27,000s, you know, having this golden cross retested on a 4-hourly, for instance. But I would mostly focus on this major breakout zone of around 28,500. Staying above there would have much greater impact in the short term over the next few weeks. So coming into next week, probably looking for a new local high, to be honest with you, breaking that 32,000 and fannying around between now and the end of the summer towards 40,000 or maybe a little higher. Again, fleshing out that 100% rough accumulation range between 20 and 40,000, the equivalent of the 6 to 12,000 of the previous cycle. Right, I hope you have a nice day, guys. Please feel free to leave comments in the description below. Even if you don't like what you hear, it's good for the algorithm. Anyway, thanks for watching. Hope you have a nice day. Take it easy.